Ever feel like you're trying to get your head around a complex situation, maybe a major company facing some serious economic headwinds, and you're just swamped with reports, articles, numbers? That's exactly what this deep dive is for. We've gathered a stack of sources, everything from financial reports, company announcements, to news articles and market analysis, all centered around AP Thailand, a really significant player in the Thai property development scene. Our mission to cut through all that data for you. We're going to unpack these sources together, figure out AP Thailand's position, understand their strategy, and see how they stack up within the broader, pretty challenging Thai real estate market as we look towards 2025. Think of it as getting the essential insights, maybe some surprising facts, and understanding what it actually means without you having to sift through everything yourself.
And when we set the scene for the Thai real estate market, say 2024 going into 2025, these sources really underscore just how tough the landscape is right now.
Yeah, I mean, challenging feels like
Yeah.
an understatement based on these reports. What are the big pressures they're highlighting?
Well, first off, there's the issue of fragile purchasing power. Household debt is persistently high, which is a major hurdle for people trying to get financing for a home.
Right. High debt makes banks nervous, makes buyers nervous. Makes sense.
Exactly.
Yeah.
And then you layer on the persistently high interest rates. That directly translates into higher monthly mortgage payments, making affordability a real challenge for many potential buyers.
Okay, so buyers have less capacity, loans are more expensive. What else is hitting the market?
There's also a significant supply overhang, particularly in the condominium segment. Plenty of completed units looking for buyers. And while tourism is seeing some recovery, the broader economic picture, things like overall investment, job stability, it isn't bouncing back fast enough to significantly boost demand.
That tracks. If people aren't confident about their jobs or income, buying a home is a huge commitment.
Absolutely. But perhaps the most stark statistic from these sources about loan rejections. The mortgage loan rejection rate has been climbing. It hit a record high of 45% in the first quarter of 2025.
Wait, 45%? You mean nearly half of loan applications getting rejected?
That's what the sources indicate, yes. It's a significant jump from 40% just the previous quarter, Q4 2024.
Wow.
This isn't just a small increase, it's a major obstacle that directly impacts transaction volumes for developers.
Wow. So a market with weak buying power, high debt, expensive loans, too much supply, and nearly half the buyers getting turned away for financing. That paints a pretty bleak picture for the industry overall.
Okay, so given that challenging backdrop, let's unpack how AP Thailand actually performed in the first quarter of 2025 based on these results we have here.
Sure. The Bangkok Post article states they reported total revenues of THB 7.7 billion and a net profit of THB 864 million for Q1.
Okay, and how does that compare? Because just hearing the numbers doesn't give you the full picture, right?
Right. It's important to put it in context. These figures were actually down year-on-year. Revenue dropped 17%, and net profit was down 33% compared to Q1 of 2024.
Which you might expect, I guess, given the market conditions we just described. Exactly. However, here's where the sources offer a crucial nuance. Despite those year-on-year declines, AP Thailand still posted the highest revenue and net profit among major listed developers, specifically those with quarterly revenue over 2.5 billion baht. So while they weren't immune to the downturn, they appear to have outperformed their direct peers in profitability and revenue during this tough quarter.
That's a key insight right there. Down overall, but leading the pack. What about the analyst perspective on this? Did they see this coming?
Well, the analyst report we looked at from Yuanta had actually forecast a slightly lower normal profit for AP in Q1, around 820 million baht. They specifically predicted Q1 would be the lowest profit quarter of the year, citing slower transfers, especially for condominiums, and a reduced profit share from their joint ventures.
Slower transfers.
Oh.
That would make sense if loans are getting rejected at that 45% rate we just mentioned.
Right. But here's the fascinating part, and it gets to the difference between, recognizing revenue from transfers and capturing future demand with pre-sales. While Q1 profit was lower compared to the previous quarter and year, their Q1 pre-sales figures showed significant growth.
Oh, really? How much growth? That seems counterintuitive.
Pre-sales were up a strong 31% quarter-on-quarter and 25% year-on-year. And the growth was particularly strong in their low-rise properties, so townhomes and single detached homes.
Okay, so demand for their new projects, especially houses and townhomes, is still robust, even if turning that into recognized revenue is taking time because of, all those market hurdles. That contrast between profit and pre-sales is really Telling. All right, here's where it gets really interesting for me. You have this company operating in a difficult market, seeing profits dip but pre-sales surge. How do they plan to tackle all this in 2025? The sources introduced their ambitious strategy. Build the ultimate for the best life. Sounds grand.
It's definitely not just a catchy slogan. It seems backed by serious scale. They're aiming for total sales of THB 55 billion and total revenue of THB 52 billion for the year, and that includes their joint ventures.
55 billion in sales in this market. That sounds incredibly ambitious.
It is. And to achieve that, their plan involves a massive wave of new project launches. 42 new projects planned for 2025, worth a total of THB 65 billion.
42 new projects in 1 year. That's a lot.
That's the plan outlined in the sources, yes.
Yeah.
And when you combine that with their existing developments, AP Thailand will have a total of 226 active projects across Thailand this year.
Okay, so it's a strategy of sheer scale and, I guess, relentless execution. But what's the thinking behind it? What are the core principles driving this massive push?
They highlight 3 core DNA elements. First, diversity in desires. This speaks directly to the changing market, creating spaces that cater to individual preferences and different lifestyles, acknowledging that, one size doesn't fit all anymore.
Okay, tailoring the product makes sense. What's next?
Second is craft space and design. Aiming to create truly ideal living spaces. They mention using concepts like empathy design.
Empathy design. What does that actually mean in practice, like for a home buyer?
Well, it's about designing spaces based on a deep understanding of how people actually live and use their homes in the modern world. So, for example, maybe it means designing flexible spaces that can easily become a home office, or thinking about natural light and flow in ways that genuinely improve daily life, not just look good on a blueprint.
Got it. Designing for real life, not just aesthetics. And the third element?
Elevation and intuitive living. This is about simplifying everything around the resident, providing services and thoughtful planning that makes living effortless. It's the idea that the home should support a good life, not complicate it.
So the strategy is huge scale, offer lots of variety, design them really thoughtfully based on how people live, and make the overall living experience easy. That's their approach to countering the market headwinds. Interesting. Let's dive deeper into how this strategy translates into the actual homes they're building, starting with a segment where they claim significant market share.
Yes, townhomes and twin homes, AP claims to be the market leader here, and they point to over 30% sales growth in 2024 in that category.
Pretty strong growth. And for 2025?
They plan 18 new projects in the segment, worth THB 15 billion. They cover 6 different sub-brands, hitting a really wide price range, from THB 1.49 million all the way up to THB 25 million.
That price range alone shows the diversity we just talked about, from entry level to quite premium.
Exactly. And their strategy here includes what they call a zoning expansion approach. They're aiming for the most comprehensive coverage across 11 zones in Bangkok. The sources specifically highlight their focus on the Muang Ake Vipavati Rangsit area, with 3 new projects planned, including Grande Pleno Vipavati Rangsit, starting around THB 5.49 million.
So they're really trying to blanket key areas. Are they doing anything different with the designs themselves within these townhomes?
Yes, they seem to be pushing innovation in design, introducing 13 new models this year. Some of the concepts are really interesting, like the Call-Live model, which is explicitly designed with the idea that residents might want to rent out individual floors.
Whoa, hold on. Designing a home specifically with shared living or rental income in mind from the start, that's directly addressing changing economic realities.
Yeah.
Maybe even helping buyers afford the property. That's a really specific, strategic innovation.
It certainly seems that way. They also have models like the Mirth model with duplex space, or the Asher model, which is a twin home with an extra wide 16.4-meter frontage. It shows they're experimenting with different layouts and sizes, even within similar property types.
And are they doing anything new with the shared spaces, the common areas in these townhome projects?
Yes, they mentioned setting a new standard for common areas. This includes features like 24 fitness facilities using energy-saving lighting and eco-waste stations for systematic waste management. They even have a specific campaign goal: no waste, aimed at recycling 100 tons this year, plus installing solar roofs in the common areas.
Okay, so integrating both user-focused features like gyms and broader environmental or cost-saving aspects into the design seems thorough.
Right. Moving to single detached homes, their philosophy is functional is beautiful. The idea being the most beautiful home is one that truly understands life.
How are they approaching that segment? It tends to be at a higher price point, right?
Generally, yes. They plan 15 new projects here, worth a substantial THB 26.5 billion under the greatest home concept. A key focus seems to be fulfilling the needs of multi-generational families, which is a common need in the region.
Multi-generational living, another specific need tied to lifestyle and potentially, yeah, economic factors too.
Exactly. And a major highlight is the launch of their ultra-luxury Majestic collection under the Palazzo and Bein Klangkrung brands. These are described as masterpieces, priced in the THB 120 million range and even above. The sources talk about massive living areas, some exceeding 1,000 square meters, and creating landmark common areas within the projects.
THB 120 million, that's definitely targeting a segment less likely to be affected by those loan rejections we talked about earlier. Can you give us a concrete example of one of these masterpieces?
Sure. One mention is the Palazzo Prungthep Kritha, with homes priced THB 7,520 million. Another is the Palazzo Pinklab Borum, THB 5085 million. They also highlight Bayan Klang Krung Sathu Pradit 57, which sounds unique, only 9 units of 4.5-story houses with rooftops, valued at THB 550 million in total, planned for Q2 sales.
4.5 stories with a rooftop, that's definitely not your standard design. It sounds like they're creating very distinct, high-value products at the top end.
They certainly are. And they're also introducing a completely new brand called Beyond. These are 3-story modern homes designed with ultra-volume spaces that seamlessly connect floors, specifically created for large families. The first Beyond project is planned for the Nuanshan area.
Ultra-volume spaces. I'm picturing soaring ceilings or maybe interconnected levels. Again, designing for a specific need, large families with a unique spatial concept.
Precisely. Then we move to condominiums. Their concept for this segment is start life of your choice.
What are the plans there, especially given the market overhang you mentioned earlier? That seems tricky.
Yeah, it is. They plan 6 new projects worth THB 20.2 billion. The focus for 2025 is something they call Life Condo Version 2025, with the concept success like no other.
And this comes with innovations, right? The sources mentioned 5 space innovations. Which ones kind of stand out?
Well, let's pick a couple that seem particularly relevant to modern living. There's openness to biodiversity, which isn't just, putting some plants around. It's about integrating nature in functional ways, like a botanical gym or a biodiverse co-working forest. This seems to respond to the growing desire for green space and well-being, especially in urban environments.
A gym and a garden, or working surrounded by trees. Yeah, that sounds a lot more appealing than a sterile room. I get that.
Exactly. Another innovation is new feel-safe design, which is about creating emotional safe zones. And this includes designs that are friendly to both humans and pets.
Pet-friendly design is huge now, acknowledging that pets are really part of the family for so many people.
Absolutely. And they also have a building that gives back, focusing on environmental responsibility. This includes features like incorporating air purifying plants, providing EV chargers, using motion sensors for lighting, and installing solar panels.
So addressing health, lifestyle, including pets, and environmental concerns directly within the building's features. That's a pretty comprehensive approach to appealing to modern condo buyers.
It is. One specific project mentioned that embodies their microvillage concept is Life Sathorn Nerith Iwas 22. It's an 8-story project valued at THB 1.8 billion, with 416 units starting at THB 3.6 million. The sources also note that 3 condo projects are set for ownership transfer in Q2: Aspire Sukhumvit Rama 4, Aspire Anat Station, and Aspire Arun Prive, which will contribute to revenue recognition soon.
Okay, so new launches plus getting revenue from completed projects. Good pipeline. And finally, the sources mentioned they aren't just focusing on Bangkok, right?
Correct. They also plan 3 upcountry projects worth THB 3.3 billion, showing an expansion strategy beyond the immediate metropolitan area.
So it feels like they're throwing everything at its scale: diversity, design innovation, appealing to niche needs, spreading geographically. But can they afford to do all this in such a tough market? That's the big question.
That's where their financial health really comes into play. The sources point out that AP maintains a strong financial position. They reported a low net debt-to-equity ratio of 0.70 at the end of 2024, which even slightly improved to 0.68 in Q1 2025.
What does that low ratio tell you, practically speaking?
It means they are not heavily reliant on debt compared to their own equity. It signals strong financial stability. And both figures are well below their internal policy limit of ones. So this gives them the capacity to fund these ambitious new projects without over-leveraging themselves.
That makes sense. You definitely need a solid base to launch a, what was it, THB 65 billion offensive.
Exactly. And their backlog value provides further confidence. As of February 2025, their backlog stood at THB 41.621 billion.
And that's basically revenue locked in for the future from sales already made.
Precisely. It provides clear visibility for future revenue recognition and acts as a buffer against, fluctuations in new sales.
Okay, strong balance sheet, big backlog. But how do the analysts view this company, given the overall market concerns we started with? You mentioned the Uwanta report earlier.
Yes. So while analysts like Uwanta have lowered their profit estimates for the sector as a whole for 2025 and 2026, citing weak economic conditions, stricter loan approvals, and even mentioning the impact of recent earthquake events on market sentiment, they actually maintained a buy recommendation specifically for AP.
A buy rating for AP while lowering sector estimates generally. That's interesting. Why AP specifically? What makes them stand out?
According to the analyst view presented in the source, AP's operational performance, their ability to maintain sales momentum like we saw in the Q1 pre-sales, their ability to execute transfers, their product diversity across different segments, and crucially, their specific strategies for navigating these market challenges, all of that stood out when compared to other property groups they cover.
So it's not just the numbers in isolation, but the approach they're taking that analysts see as differentiating them in this environment.
That's what the report suggests, yeah. They seem to be executing better and have strategies that appear better suited to the current challenges.
Okay, so financially strong, ambitious strategy, getting an analyst thumbs up. What does this all mean for you, listening in, potentially as an investor looking at this company? AP Thailand is highlighted in the sources as a consistent dividend-paying company. Let's talk about that.
And the analysis provides some compelling details here. The Simply Wellsane analysis notes a current dividend yield sitting around 8.96%, with a future yield forecast slightly higher at 9.1%.
Almost 9% yield. That's significant in almost any market.
Yeah.
How does that compare specifically to the rest of the Thai market?
It's very high. It passed their dividend criteria check with flying colors, 6 out of 6 points mentioned. When compared to the broader Thai market, it's significantly higher than the bottom 25% of dividend payers, which yield around 3.36%, and it firmly places it in the top 25%, which starts above 8.26%. The real estate industry average yield is cited around 6.0%.
So well above average for the sector and the market overall. Impressive. But is that dividend sustainable? Can they keep paying it?
Well, the analysis indicates it's well covered by earnings. They have a payout ratio of 38.7%, and it's also covered by cash flows, with a cash payout ratio of 50.2%. Both figures suggest they are generating enough profit and, importantly, enough cash to comfortably cover those dividend payments.
And has that been consistent over time? Or is this a recent thing?
No, the sources note the dividend payments have been stable and have actually increased over the past 10 years. The Uwanta analyst also viewed this high dividend yield, they cited 7.5% based on the 2024 dividend, as a factor that helps limit downside risk for the stock price in the short term. Provides some potential support even if the market stays weak.
Okay, let's try and put it all together then. You have a major property developer, AP Thailand, operating in a market with undeniable, pretty severe headwinds, high debt, fragile income, record loan rejections, excess supply. But instead of just hunkering down and waiting for things to improve, they're launching this massive, very detailed offensive, 42 new projects, bringing innovative designs and concepts to market.
Exactly. Their strategic focus on diversity, empathy design, and intuitive living isn't just, theoretical jargon. It's showing up in concrete ways, like the Olive model, pet-friendly designs, integrating nature. This seems explicitly designed to attract buyers and differentiate themselves, even when overall market sentiment is weak and financing is difficult for many.
And by offering that huge range of products across all these price points and locations, from affordable townhomes up to ultra-luxury single homes and innovative condos, they're trying to capture demand in different segments, perhaps targeting those less affected by the credit crunch, like the high-end buyers, or those with very specific needs the new designs cater to.
Right. And their underlying financial health, that low debt-to-equity ratio and solid backlog we discussed, provides the foundation needed to actually execute this ambitious plan. It gives them the firepower.
While that robust, well-covered dividend yield offers potential support for the stock price and a solid return for investors, even if the overall market recovery is slow. So we've gone deep into AP Thailand's world, pulling out the key insights from the sources you shared, the tough market, their performance against peers, the sheer scale and detail of their counterattack strategy, their financial strength, and the investor angle with that dividend. You should now have a clearer picture of how one major company is actively trying to build the ultimate defense by, well, going on the offensive in a challenging real estate landscape.
It absolutely highlights that even within difficult market conditions, specific detailed strategies and operational strength can differentiate companies. AP's approach is a compelling case study in trying to maintain momentum through product innovation, differentiation, and frankly, sheer scale.
So here's a thought for you to take away and consider after hearing all this. In a market facing such powerful external pressures, like record loan rejections and high household debt, how much can a company's specific detailed strategy in its product innovation truly mitigate or maybe even overcome those powerful economic headwinds? Something to think about.